Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on May 29th with some commentary in the energy market. So let's get started. Pretty big day here right now. July crude trading around $60.25 a barrel. That's up a little over $2.50 a barrel. And to put that in perspective, that's about a 4.5% move higher here today. So certainly seeing a lot of strength there. Brent's firmer, it's up a little over $2.80 a barrel. Nat gas bucking the trend, that's off about 6 cents. That's down a little over 2%. So seeing some continued weakness and follow through here in the nat gas. So we've seen prices really just kind of coming on down. The RBOB up strong, that's up about 8.5 cents. The heat's up a little over 7.5 cents. So all in all, the oil and the complex enjoying a very strong day. Now, got a few different reasons why some of this is going on right now. First of all, let's talk about the EIA data that came out actually yesterday, seeing as Monday was a holiday. We did see another draw in the stockpiles, not much of a surprise there, although the draw was a little larger than what most traders were expecting. That draw came in at around 2.8 million barrels. We've also have the dollar. Take a look at the dollar index here. That's recently been stronger, but the last couple sessions has been pulling down. That's been somewhat supportive for oil. Overnight in Iraq, there was a bombing that took place. So a little bit of geopolitical events kind of impacting the market. I think the big story here is something that I've mentioned in both the eView, where I write the column there on the energy markets. You should go ahead and check that out. Just wrote one earlier this week. But in addition, to that, here in a lot of the prior videos that I've talked about here is the strong demand at the refinery level. And take a look at the RBOB market. At the refinery level right now, refinery capacity utilization is currently at about 93.6%. To put that in perspective, the 5-year average is right around 87.8%. So we're seeing strong demand at the refinery level. Refiners are enjoying great margins at these current lower oil prices with the demand for RBOB. So we've really been seeing that, and I think that's overall been supportive to the oil market. Something that I mentioned in the eView that was put out earlier this week, where I talked about the technical picture there, and although I referenced being cautiously bullish, and that has a lot to do with because we do still have a lot of supply out there. You look at the oil market, look at our total stockpiles, they're still exceptionally high for this time of year. You look at our year-over-year numbers and our 5-year average, but again, we're seeing that stronger demand. But I think here, when you take a look at it here, oil prices recently have been coming down a little bit, and in the eView I'd mentioned targeting an area around the 56.25 area, and just the other session yesterday, actually we got down to around 56.5. And when you take a look at it on the charts there, after coming to that here and then bouncing off of that level significantly, I think what you're seeing here now is obviously a reversal that started to take place yesterday, and we're getting that additional follow through with it here today. So take a look at that. Give me a call, shoot me an email. We can get into a little bit more detail and tell you where I think prices are getting ready to head from here. And options on futures may involve substantial risk and may not be suitable for all investors.